Hello and welcome to Lonsec's market update for July. Firstly, we'll look at recent developments and then we'll turn to the outlook. Firstly, looking at recent developments, it's pretty hard to go past the surprise Brexit vote in the UK. This in June caused great volatility in markets. It's fair to say that we've seen the main impact as political uncertainty, with the PM Cameron resigning and the Labor Party there in the UK in turmoil itself. Also Scotland and Northern Ireland were wanting to remain in the EU. So it's mainly political uncertainty there at the moment. The economic impact is harder to ascertain. It's expected to be negative impact in terms of lower growth in the UK and some uncertainty around investment and confidence in the UK. But some mitigating factors for the Brexit is that the UK was not in the euro. The pound is a separate currency. There'll be a 2-year transition period for the UK to leave the EU, and then over time the trade agreements will be renegotiated with the EU over time. So these are the mitigating factors. The market impact has been for the pound to move lower. We've seen lower bond yields across the globe. We've seen generally lower markets, equity markets in June, higher bonds and higher property. And particularly we've seen weakness in UK and Europe equity markets. But overall, markets down around 2 to 3% in June, with the UK market down 6.4%. We also finished the financial year with a mixed results across the board. The S&P actually managed to finish up 7.3%, but the FTSE finished down 9% and the Australian market was pretty much flat. Property has been faring much better over the last financial year with double-digit returns, while the bond market managed to finish with high single-digit returns. Just looking at Australia, it's really also a story of political uncertainty in June, with a very close or ambiguous election result. We've seen though in recent days that the LNP has just pulled ahead, with the market now expecting the LNP to get 76 to 77 seats, enough to get a majority. And this now has brought a greater certainty back to the political environment. At the same time, the Reserve Bank has recently elected to leave rates on hold. So turning to the outlook now, despite the volatility that we saw in June, the markets have managed to recover in July as we speak. So what's happened is the US has started to improve in terms of the payrolls have come in strong with the 287,000 new payrolls for June. And also the manufacturing surveys and non-manufacturing surveys have shown some recovery, with manufacturing up to 53 now and non-manufacturing up to 56. So the US economy does look like it's starting to rebound again, and the US market has managed to rebound and close above the 2,100 level that's been holding it back for well over 18 months now. It's just hit through to 2140 as we film. The other thing that's noticeable has been lower bond yields or lower interest rates across the globe, with the US interest rate down to 1.4%. We now see negative interest rates in Europe and Japan, and the Australian bond yield has come below 2% now. So interest rates are very supportive of the market. We've seen on the commodity front a mixed results there, with gold moving significantly higher, probably on the political uncertainty we see in Europe, but also oil has started to retreat just in recent days on supply continuing to be a worry. The Federal Reserve now looks to be on hold in the short term, with some worries about the European uncertainty keeping it on hold, despite the stronger data in the US recently. The Reserve Bank recently left rates on hold, but the market's still expecting another cut as we head into Christmas, on worries about low inflation in Australia is the main concern here. And then we've got US reporting season. The market's still expecting negative earnings growth there, but taking out materials and energy, earnings growth still expected to be around the low single digits. In Australia, also a similar story where the market is expected to be very low growth, particularly if you exclude energy and materials. And then overall, as we move forward to the Christmas period, second half of the year, that we're expecting the US and Australian market to be a reasonably positive outlook, but clearly the risks lie around Europe and Asia, where we're still remaining quite cautious. That's it for Lonsec's market update for July. Thanks for watching. We'll be back in August with another update.